All right, nearly ready to set this up. Just doing some sound checks on the back end here. And we'll get rolling into this in just a moment. I am sorting through a few live stream difficulties right now as well here on the back end. So give me just a second here and we'll get rolling. Let's see. I have too many screens. That's part of the problem here. All right. Let's cut the music here and we will jump into this here. Hello and welcome to Landy's Crypto Corner. Today is May 4th. May the 4th be with you and all that of 2023. And this is Midweek Madness. This will be a live stream, at least to begin with. We'll see how it goes. And if we can get some participation in the live stream here. Part of what I'm doing is multi-streaming at the moment. So I'm doing this by myself at the moment, so forgive me if I don't answer questions coming in the chat right away. I will look in there and try to answer questions in a few moments. But we're going to start out by taking a look at Bitcoin post FOMC today. You know, FOMC candle was actually one that had the potential to, well, kind of set a low here, but it is not a confirmed low until we see price trading back above and closing above the open of the May 1st candle from Monday. So that opens at 29,240. We did swing that area in today's price action and have not been able to get back above there in the lower term time frame. So one of the more interesting things that I do want to look at today, for those of you that follow and maybe even subscribed from the shorts feeds. If you haven't seen some of the long form content, I do suggest you watch the Macro Monday stuff. I will be adding more midweek content and even end of week content in the long form formats. And of course, the shorts are going to remain the 60-second shorts daily for as long as I can keep that up on a daily basis. You know, there may be a day or two that I miss here and there. But yeah, if you watched the Macro Monday video, I talked about the daily levels that we're looking at here. And realistically, from the monthly perspective, Bitcoin is, you know, going to be in a bit of a wider range for a little while. I do think it's, you know, more likely than not capped to the upside by this weekly overhead for a little bit. There is the possibility that it could run up to the monthly support there at $35,000. That is not out of the question. And then to the downside, there's the weekly support at 24.3 or so, and then the monthly support at, well, the first of the monthly supports at around the 23.3 area. This, you know, FOMC meeting was not actually as volatile as I thought it would be. Typically, you know, we did have some run-up volatility intraday, but nothing too crazy when looking at like the hourly, for instance. You know, kind of dipping down in the Wednesday candle down into support here in the mid to low $28,000, popping back up to around that 29, low 29 area at around 29.4 on the high there, and then coming back to the daily breakout area. So nothing too crazy. I will say that from the 4-hour perspective, this is this is an uptrending structure, but in the context of the overall 4-hour structure here, does look like it wants to come back down and at least retest mid to low $28,000 area. somewhere around the lower first standard deviation. If it does break down below the, if it does break down, oh, I guess I changed the color of my arrows here. If it does break down below the lower first standard deviation and specifically start closing below 28,000 and that lower second standard deviation, then it's more likely that things are going to run the current lows rather around that $27,000 area to around the wick lows at that 26,500. So, and from the daily perspective, what would that do if that did occur? Well, that would start turning the Bollinger Bands to the downside. You can already see that the basis band here is, kind of turned down. That doesn't mean too much right now. Bitcoin staying in between the upper second and lower second standard deviations does tell me that this is a bit of a consolidation. But if things did start breaking down below the lower second standard deviation, start getting closes below the range lows, then I would be looking for this to start running down to the previous daily breakout. That's the PDB there. And at least test around, that upper $24,000 area to $25,000. And then if things did start closing on the weekly down here, then we start looking at weekly and monthly supports down below that 23.3 to 24.3 area, the monthly and weekly. But staying above $28,000 and above 28,600 specifically, this is the daily breakout that, Bitcoin found a lot of resistance once it got up here, broke out above it, put in that nice high up at $31,000 here, and then a bit of a sweep of the actual low structure over here before taking off again and topping out at about that $30,000 area. And oh yeah, I appreciate it. Bitcoin in 60 seconds is nice. Still hoping for 27K. It might happen. That would be a sweep of the lows here at that lower second standard deviation. I don't know if that's necessarily in the cards right now. I mean, the 4-hour is painting a bit of a, it's painting a bit of a consolidation right now. I mean, momentum is the big thing to watch here. And momentum is currently initially crossed down. But in the context of declining volatility, so if you do have the Landy Bands indicator, you'll see that the BBWP metric here is 46 over 50. That does mean that the BBWP is underneath the simple moving average, which in this case indicates that that there's a bit of a mean reversion. So we're in an uptrend. Mean reversion is in play now after putting in the high, and realistically not really going to shift the bias until the last low here at 28,122 is closed below. That would be closing below the basis band and the lower first standard deviation rather. So that's where we would get that bias on not only a trend shift, but this no longer is mean reversion, but it has a possibility to then begin expanding to the downside. Any closures below the lower first will start expansion in the downside direction. Any closures above the upper first will begin expansion or re-expansion in this case, because it's already an uptrend. It has already tried to close above and did close above the first standard deviation, made an attempt at the second. But if it does close back above the upper first standard deviation, BBWP will begin to tick up again. Now, that doesn't mean that it's going to get above the moving average. And if you are interested in BBWP, it's just a volatility metric that helps you gauge expansion and contraction of the Bollinger Bands. And it is, like any other indicator, it is lagging. But you can download it. It's free. It's in the TradingView indicators stuff here. Just search BBWP, and it is the one by the caretaker here, and just use it in its stock settings. But you can see that I actually got permission from him to utilize some of the background code in here that calculates BBWP in my indicator. Great guy. I want to say thank you, the caretaker or caretaker. You've been fantastic and very helpful in allowing me to do that. But in this case, we can see that, BBWP was increasing on the move here from the move down, and then the mean reversion play was back to the top side. So we expanded to the downside, mean reversion play was back to the top side. And if it can, start to keep its closures above the basis band, this will switch back around. So that's something to be aware of. I have some videos in the pipeline that are going to explain all of this in detail. So, but as it stands right now, the expansion phase was to the downside, mean reversion back to the top side. In order to switch this around, as this mean reverts, it's got to stay above the basis band here and use the lower first standard deviation as a support. And if it cannot do that, it will re-expand to the downside below the lower first and back above the upper first standard deviation. It will try to re-expand, in this case, with price going to the top side here. So what's going to be more interesting is some of the longer term timeframes here. So on the 2-day, which is something, in Bitcoin in 60 seconds, I would love to cover the 2-day as well. Hello, welcome. I would love to cover the 2-day as well on the 60-second videos, but it's already difficult enough to get a large amount of information out in that 60 seconds that, is coherent and understandable by a wider audience. And in this case, we can see that Bitcoin on the 2-day came down and found support on the lower first standard deviation. This is actually a good thing. This is something you want to see, because the expansion to the upside, and we'll take off support and resistance here for just a moment. The expansion to the upside, was pretty swift, coming from the actual lows. We got to zoom out a bit more here, but coming from the actual lows, you can see that bit of a higher low on that major low structure begat really nice expansion to the upside, found support on the basis band of the Bollinger Bands, came back up and tapped on the upper second standard deviation, and then came and mean reverted hard down to that lower third on a wick low, and then resumed its trend to the upside. The basis band was positively sloped through here and had only just began to get its negative slope after, the closure down here. And typically you don't see too many closures outside of the third standard deviation of the Bollinger Bands. You will get it when there's very tight contraction. You'll see a couple closures outside, as denoted by the purple and the arrow up in this case. And, to the other side, it would be purple dot, arrow down. Now the purple dot just denotes that we're closing above the upper second standard deviation, which is going to beget aggressive expansion. The red arrow, did I say yellow arrow? Red arrow here denotes a closure or a break outside of that third standard deviation. In this case, we did not see it. It's very rare that you're going to see closure. So we didn't get a closure outside of that. Now this could have expanded back to the downside, but we had a nice 2-day candle back up. And Bollinger Bands were not very tightly contracted here. So on the 2-day, we see a lot of the same kind of setup right now with this M pattern that could be forming, at least when looking at, the daily at the moment and the weekly. If you watch the Macro Mondays, the weekly is kind of setting the bias that even if Bitcoin makes a higher high here soon, and remember, the weekly takes a long time to play out, but even if it does set higher highs, it's going to mean revert pretty hard from the weekly standpoint. And I don't know if it's ready just yet. We are definitely if it's not going to be this quarter, it might be, over the summer. So, but in this case, we do see contraction on the Bollinger Bands on the 2-day here, as price has pretty much gone sideways since, March. And that's a good thing when in a transitionary period from the monthly perspective. So in this case, the 2-day is something to watch because the upper second standard deviation is at 29,700 or so. Closures above there will get expansion to the upside. And then closures below the lower first standard deviation at 29,700 to the upside and 27,800 or so to the downside. So we would begin to see expansion to the downside below the lower first standard deviation, targeting initially in and around the lower second and lower third standard deviations. And realistically, the lower third standard deviation is down here at 25,900. I don't see things getting hit outside of that lower second standard deviation unless there was a real whipsaw event that crashed the markets. And the lower second standard deviation at 26,850 rather would be a swing of the local lows. And I'm more biased towards that happening before anything else. I do think we'd get a nice bounce before any kind of direction was determined, whether it be continuation to the downside supports here, at that 24.5 on the 2-day chart, or whether it's a bounce back up to the basis band, it regains and starts trying to take out the local highs. That's what I'm going to be watching, and here's why. The 2-day has a momentum shift back to the upside here. And at the end of today, the closure today here in about, a little less than 4 hours, we're likely to see that play out to the upside in terms of, like, you can think about Stoke turning in this case as pressure. Now, this is all just consolidation in the grand scheme of things, so I'm not too enamored with this cross back to the upside. I'd like to see how things close today and then go from there, because we do see that, we have a bifurcation between timeframes between the 2-day and the daily. Daily's about ready to cross down. Not on a confirmed cross. You want to see both the K and the D read pointed down. In this case, this would be an initial cross to the downside, so I would not be putting a ton of weight on it until we saw the K and the D read crossing. But this would be a confirmed cross back to the upside, which from the 2-day chart means that the bias is this thing hits the downside. It's probably a good long evaluation position. So in this case, it starts swinging the low, probably going to bounce. Even if the ultimate destination is going to be lower, it's probably going to bounce pretty hard, at least from the 2-day perspective. So I will be evaluating long positions around the bottom side of this structure with tight invalidation. So, and that all comes from the daily stuff. So, we hit some of those key areas that I've called out for a little while here, and that will be the ultimate destination there. So I'm trying to read chat as well. So excuse my pausing and and mixing words here. So yep, BTC is full of fake outs. Yep, around 29K. Sweep the lows, scare the crap out of everyone. Yeah, that 26.5 sweep of the lows would be. It would cause everyone to get really bearish. Now the thing is, a lot of crypto Twitter and crypto YouTube is predicated on the psychology of what they think the quote unquote market maker or CZ or whatever, might be thinking. And we just can't factor that into our trades, right? So we got to go by what's in front of us. And especially if you're trading with larger position sizes, you got to have your areas laid out pretty well so that you can manage your order process to limit slippage. If you're a smaller account size, then a lot of what you're trying to do is grow your account. So you want to, have a higher win rate, and you want to have more guaranteed setups. So one of the big things that I caution both new and professional traders about is thinking too far ahead. You want to be aware, and you do want to have those ideas like this would be nice, and that kind of stuff. But we do want to just make sure that we have tight invalidations. There's things that we would like to see, but those are just, I'd like to see that. And don't ever trade off of that. Not saying that you do, just needs to be said. And, but yeah, I do agree, by the way, that it would be nice to see it scare the crap out of everyone and then bounce right back up. And you can see based on the daily and 2-day that that's very likely that could happen. But doesn't mean it will. Hello, sir. Yes, price is king. Block all the loudmouths. Block the loudmouths. Well, I see that you're reading some of the comments, maybe, in some of the other threads. Yeah, apparently some people don't like Bollinger Bands, but they weren't listening to what I was actually saying in some of those videos, which is, take into account the price structure, and then Bollinger Bands are just there to help you with volatility. And for anybody that is using the indicator, give me some feedback, whether it's in, you can always, my email is on the YouTube. You can contact me through there. You can leave comments, obviously, down below. And when we do live streams, go ahead and jump in and let me know if there's anything that you see needs to be corrected, or nice to have stuff, or, features that you'd like to see added. So now, one of the bigger things that I might take a look at here while we have some time is the currency and bond market. Now, there's been a lot of threads going around about the 3-month yield and recessions. Yeah, everybody would appreciate lower prices. I mean, it's like I said in the Macro Monday video, it's not crazy to go back and look at things and go, man, I should have done better. That's always a feeling that you'll have, even if you put in your life savings. Like it's, I wish I had more, buy this low or get that retrace. Yeah. And that's a good thing to feel. Always stay hungry, right? Now, I'm sure that many of you have seen the recession indicators, and I shared, or maybe I didn't share that video yet with some of you guys, but George Gammon has a good video about, the leading indicators for recession, and he's using Jerome Powell's words to basically confirm that, yeah, even he looks for this, and we see what's happening, and we see that basically 3-month forward-looking yields on bonds are at or above the Fed funding rate. So when this happens, it's a good indication that, it's a good indication that we're in a recession, although they've redefined recession. So hey, I appreciate that, man. Now, if anybody, I don't know how many of you actually have ever bought bonds before. Now, you can buy money market funds that trade off of the bond market. You can buy bonds directly. But when you're buying bonds, there's the 3-month rollover strategy, which is you buy the 3-month forward-looking yield, right? So you buy the 3-month bonds and then you keep rolling it over. So then eventually you're just getting paid every quarter. As it's a good way to insulate. And when they're, paying out a 5.25% yield, that's pretty good. So what does that mean? We can all speculate. I don't think they're going to have much more on the right side of things in terms of hiking after this. That was pretty well indicated yesterday as well. We see that Dixie is on a major support, and I still don't remember how long I snapped this, how long ago I snapped down this. It was not back here. These just happened to line up. But that 101 to the high 100 area is going to be crucial. When looking at the quarterly, this is what I'm waiting for, is the end of this quarter. We got 2 months to go, obviously, so there's a lot can happen. But the momentum shift in the quarter. Now, that doesn't, even if there is a momentum shift on the quarterly Dixie chart, that does not mean that it's going to immediately play out and nuke to the downside. It can still even make some higher highs on the daily, maybe even the weekly, retest its local highs, that kind of stuff. But the overall, between the next quarter and the quarter after, so on and so forth, it's going to start, weakening. And I've seen a few analysts out there just kind of getting a little ahead of the game in terms of, oh, look at it, it's going to break down and everything's going to nuke and, or everything's going to, we'll have volatility and then everything's going to make new highs and stuff like that. And, maybe, could it come down to the monthly level at like 99.50 or so? Yeah, but it's on a pretty major level right now. Now, $100, basically it loses $100 and this thing's going to eventually work its way lower on the monthly to around that 97 area. And I don't like when people get ahead of themselves. And there's a lot of personalities on crypto Twitter and crypto YouTube that get very far ahead of themselves. And in terms of front running or putting out information that will, maybe lead impressionable people astray, and even some professionals astray because, they're trusted sources and whatnot. But in this case, this thing's already kind of swept its lower second standard deviation. We see that BBWP is, increasing on this move down. Is it ready for an aggressive move down on the weekly? Yes, it could, but this is a big area of support. So just keep an eye on it. And if it loses it, make sure that you're not, basing your trades based on this losing its support, right? A lot of people like to play the inverse Dixie. So if Dixie's going down, the theory is everything's going to go up, and that just doesn't play out that way. Sometimes things can run congruent with Dixie and have concurrent downside moves and upside moves and so on and so forth. So it's more about the longer term chart. When looking at traditional markets, I think we are getting close to seeing this start to take out its bottom side structure here. It closed just above. It did tag the lower second standard deviation, so I wouldn't be surprised if this tried to bounce, but it is starting to get expanded. This is the early etchings of expansion to the downside on SPY, for instance. When looking at, at BBWP, this is not a great look, but to be fair, it could bounce. And if it does get back above the lower first standard deviation here at 408, if you're looking at SPY, or 4088 for SPX, then it's likely to at least retest the basis band around 4121 or 412. If it does start closing below that lower second standard deviation, which is not far from where it closed today, and that's 4055 or 405, this is going to increase BBWP substantially and beget a break of the low, targeting down to the next area of support at around 400 or 4,000, if you like, which is right around that lower third standard deviation. Probably get a nice bounce from there, at least initially, but then probably works its way lower when looking at, a regular Stoke. This is looking like it wants to head lower. So that is something to keep an eye on. Traditional markets don't look great, but they do have, opportunity as, it is coming off of an uptrend. It's testing this, albeit it is a lower low, but it spiked up to a higher high because of divergences. If there's if there's going to be a trend shift, this is where it's going to happen. We see basis band starting to set up for, possible curl down. The bullish side of this is that this thing just kind of chops sideways for a while, and each low, each run of the lows gets picked up. I don't know if that's necessarily going to happen, but it is something to watch. So the birds have landed on my roof. So if you hear some background noise, we'll know that that's just birds. Take care, bud. All right, so that's kind of all I got today. Trading around 28,900. Nothing too crazy. If it's closing above the basis band, that's great. Bitcoin does look weak in some of those medium-term timeframes below daily. And the daily is looking like it wants to turn on any closure below 28,930 or so. Bitcoin trading right around there. I'm not totally convinced that this is like ready to break down, but I could easily see a test down a little bit further. If 28K is lost, that's around the lower first standard deviation. Then it's likely we sweep those lows around that $27,000 region. Just watch the lower second standard deviation if we do get closures below there. And at least on any initial rundown to around 27K, you're going to see the Bollinger Bands initially react. So it's right now we're looking at consolidation. So at minimum, I do believe this is going to stay range bound for a little while longer. We get some consolidation and then we see a larger move later. So I want to thank you guys for hanging out. Not going to do alts today. I was actually thinking about doing altcoin roulette. I did have my application that I created hooked into Binance to do some altcoin roulette. But it is only, I have to pick a different VPN. Basically, it's not communicating through the VPN as it stands right now. So I got to sort through that. And then maybe next Midweek Madness, I will take a look at some alts. We'll play some altcoin roulette and see what comes up, see if any interesting alts come up. I do want to thank you for hanging out. If you do find live streams, Bitcoin in 60 seconds, Macro Mondays, useful, helpful, go ahead and, obviously like the videos. You're already subscribed, but go ahead and share them if you do think that other people might find this stuff helpful. I do have educational content that will be coming out soon. I have a subscriber goal for that. So I will be releasing, basics and advanced stuff. And once I hit that goal, you'll see that stuff go live. And the closer that I get to that subscriber goal, I will start talking about it more like, hey, this amount of subscribers and I got more content that's going to go live. It's just right now I don't have enough subscribers and the algorithm isn't going to push things as much until I get to a certain level. I need enough of a subscriber base that it's actually going to be useful and helpful for those that come through. So I hope you have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe and stay safe as always. And